It's not about picking stocks. It's about picking the right portfolio.
Being down 3 to 5%, that's one thing. How about down 6? 10? How about 12? Okay? Now, many of you would fire me if I'm down 3 to 5%. I like that. I like that kind of expectation. I want to work. I want to win. And if I'm not winning, maybe some of you cancel, but then you come back to me, and thank you for those of you that did this morning. I appreciate it. Because what's happened since July, when some people fired us because they're, I'm missing it. I go to the golf course and my buddy is long tooth. Holy shit, I just got rooster wet with the waters. That's how you lose your money. That's how you lose your golf membership, okay? You go from down 12.2% is the Nasdaq now, with the generals having been shot. So again, whether we like the stock fundamentally or not, I mean, Amazon's going to be very interesting today because the trend on that is not, again, in play yet. 132 is trend for Amazon, by the way. So pay attention to that. But we have Qs again and again and again. This is where the most pain is because this is what everyone owns. Of course, people that don't know what the hell they're doing and have that as their only asset allocation are going to have to deal with that. But again, we're looking at it for what it is, which is, of course, signaling phase 3 of the bear market. So again, that's what that is. S&P 500 actually is down a full 10% now from where we slapped that on an ETF Pro as well.
So I did some back of the envelope work on what a 1% move means in terms of your retirement. It's significant. So like a 1% drawdown in your retirement, if you're 55, would equate to 3.6 months of additional labor until you're allowed to retire. Ooh. A 5% drawdown, Keith, would be, let's see, 5% would be a 1.4 years of additional work. And so right now, people, they have to work about 5 more years if you're 55.
5 more years
of work.
Yeah.
You're planning to retire, push that back 5 years.
No, so you think that I was serious? Like remember that time that I was in the car after a macro show and I took like Q&A? It was in July.
Yeah.
And I just kept going all the way to like 10 o'clock in the morning.
Yeah.
And I said,
with all the humility in the world, this is the beginning. The very beginning of us going from making, again, a big difference in many of your lives and in your clients' lives, not in the last 3 months of a Q's chart. Don't be silly. This is far more serious. This is about every dollar you've ever made, preserving, protecting it, not having drawdowns. It's not about chasing what everybody has to because they have no other options. When they say, I don't know Japan, well, that tells you all you need to know. It's kind of a big country, right? But this is the very beginning of phase 2 of Hedgeye risk management. This is it. We had phase 1, which was 15 years. I know in my heart and in my mind, as well as driving down this bloody highway, just ranting about it, that the nature of the feedback, questions, compliments, criticisms, tells me that what I've seen for 15 years isn't really well understood by many people at all. And it's not all of you, thank God. But it is certainly people that are on TV today, on my Twitter Contra stream, they don't get one bit of it. And that's why during the next collapse, and I don't mean like collapsing things that are already collapsing, like crypto and oil, that'll be phase 2. And phase 2, I think we're probably set up here now to maybe build a big asset management business on the back of it, because the answer could be really simple. Add it to more Hedgeye products.
Now you're going to understand, right?
Yeah.
You're not, for those of you that executed it, you're not going to have to work an extra 1.5 or 5 years. Unacceptable.
Yeah.
Not funny.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.